And that makes me wonder if at least we go down 80 to 85%, which gives me that 12 to 13,000 target, or could we actually go even a little bit lower? So I think that we're still going to see another leg down, minimum 12 to 13,000, and then I'll have to reevaluate if it's going to go lower after that. And then I also think, gold is starting to look very interesting down here. It's looking like it's trying to hold support. And I think the biggest thing out there that investors should be paying attention to is the dollar and then the 10-year yield. And those both have been on a tear lately, although it does look like the dollar may have topped. So short term, we probably have a near-term top in the dollar. It doesn't necessarily mean we can't go higher in a few months, but there were some key things that actually happened here. And I'm going to bring up and I'm going to show this chart for you guys. Let me just bring up my charts here and I'll show you guys what we have going on. But if we look at the US dollar, the USD JPY, which is the dollar yen, I want to show you this. So this is a line that I was following recently, and you saw the yen was just getting crushed against the dollar more and more. But look at the trend line that we just hit a couple days ago. And that to me was a signal that the dollar may start to weaken. And sure enough, we've started to see that. We should see a continued pullback on the dollar yen all the way back to at least 139. So there should be some more downside. That does imply that the dollar, the DXY, should also stay weaker in the near term. Let me bring up this chart, and I think this is such a cool chart to show. So we're going to look at the 10-year yield chart. So the 10-year yield, which is interest rates. And if you look at, this is the daily chart, and over here, this was in June. So in June, the 10-year yield was at 3.5%. When the comments for Jackson Hole came out, we were at 3.1, and we've only gone back to 3.3, even with the most hawkish comments the Fed has ever put out on hiking rates and being just hard against inflation. And what that tells me is that they believed that rates were going to go higher back here than over here. And so basically the bond market is calling the bluff from Jerome Powell and saying, you know what? We think you're talking a tough game, but we think that when the economy starts to weaken, you're going to back off really quickly, and we're not going to see rates as high as what the stock market is thinking in this situation. And I think you could almost confirm that with the DXY, right? So yesterday, or in the last couple of days, we had those comments from Jerome Powell again. He reiterated his hawkishness. And what happens to the dollar? Instead of rallying higher, it actually fell. And so again, now the currency markets are starting to doubt Jerome Powell. So I'm in the camp that I think it all depends on the CPI data next week, whether it's 50 or 75. But I do think if the inflation comes down decently, we might only see 50 basis points in the September meeting. So I think that's the key, is to look at the economy, the economics of the situation, understand how oil's still going to get out there just at a discount anyways. And it just leads you to believe that I still think oil is going to go lower. You could be due for a bounce. In fact, if we look at the chart here, I always like to show my charts. You could see we actually did recently just hit this trend line, which again, you're seeing a bounce today. We're back to about $86.77. But I think this is just a bounce before we break this line. And I think you're headed into the mid 70s by year end. So I still think there's more downside. And again, it's going to coincide with seeing the economy in the US continue to signal recession potentially. And I think Europe's going that direction, maybe even worse than the US because of the natural gas crisis. And I think most of the world, I think China's already kind of there already due to what I'm hearing as well. Yeah, so uranium's had an amazing move over the last 2 weeks. We're starting to hear about maybe some nuclear power options coming back. If we look at the chart, number one, I mean, this is just a beautiful thing, right? So you had this trend line here, and every time price hit it, come here, 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 it was a buying opportunity. So here what we saw is this downsloping trend line, you broke out. So you've had a short-term breakout on uranium, and this is the URNM, so it's the uranium ETF. But basically what you want to be careful of if you're a uranium investor is you are coming up to another resistance point on the URNM at around 86.50. So just be aware that if you get around 86, price is going to run into a roadblock and it may have trouble. You may get, that might be your level to see a bigger pullback. Now, how big of a pullback, I'm not sure. I think overall, this is a bullish consolidation macro pattern, which means the longer term is still bullish on uranium. But as a shorter term investor, you want to be very careful if price gets to 86, 86.50 and look for a pullback. As an investor, for me, I wouldn't be a buyer here because it's already rallied too much with very little reward left. So I would look for it to hit that level, pull back and consolidate, and I'd be looking to buy that pullback. The only thing I would point out, and this is a really cool point about gold, is gold has still been an amazing performer this year. Number one, if you looked at gold in terms of euros, it's having a great year. If you looked at it in terms of yen, it's having an awesome year. In terms of the dollar, not so great. But even then, the dollar's rallied 15% this year, and gold is only down about 4 or 5% for the year. So think about that. In a normal market, if someone told me the dollar was going to be up 15%, I would be like, okay, well, gold should be down 15% then. The fact that it's only down 4 to 5% tells you that it's actually doing its job and holding on to its value very, very well, especially when you compare it to the S&P or Bitcoin or anything else. So I think, again, you have to just say gold is doing its thing. If the dollar, and eventually the dollar will pull back dramatically, then gold will have its big epic move here. What I love seeing is this sideways chop on the daily chart. This again is bullish consolidation, and eventually the probabilities dictate that this pattern eventually breaks to the upside. So again, it's not the sexy mover. We're not seeing those big moves in it, but in reality, it's actually been a very, very solid performer in spite of a really strong dollar. Yeah, so Bitcoin's been dancing right around that 20,000 level. And the reason why I was harping on 20,000 is because that happened to be the high from the last bull cycle. So in 2017, we saw this unbelievable percentage move to 20,000, and then the bear market started. Finally, we got into the next bull market. And then basically when price came down there, you would expect it to have some bounce and some sideways chop. And that's exactly what we've seen here. It doesn't change my view that Bitcoin is not at a bottom yet. Bitcoin in its normal bear market cycles goes down about 80 to 85%. I think it's only down about 70%. And this is the first bear cycle the Federal Reserve has not been printing money during it, right? So in every past bear market cycle, the Fed's been printing money with QE and QE1, QE2, and all those. And this is this first cycle it isn't printing money. And that makes me wonder if at least we go down 80 to 85%, which gives me that 12 to 13,000 target, or could we actually go even a little bit lower? So I think that we're still going to see another leg down, minimum 12 to 13,000, and then I'll have to reevaluate if it's going to go lower after that.